Welcome to the Bitcoin Infinity Academy, brought to you by the Plan B Network and Bitbox. This is our course on sovereignty through mathematics, my first book. And this chapter is called HODLing On, I believe. I'm here, as always, with Luke de Wolf. I'm Knut Svanholm, by the way. And I'm here with Luke de Wolf. So, good morning, Luke.
Good morning, Knut. Good to be here. I do believe, in fact, this chapter is called Holding On, but I think the typo is in a mental direction or a literal direction, something like that.
Yeah, it's holding on and not hodling on. Yeah, there's a typo in the book, or the typo was in my, or there was a say O, or whatever is that, the pronounce O. Is that?
I don't know, an attempt to use the anti-typo. The first one was a typo.
Yeah, it's all in line with the overarching big plan, and everything's meticulously planned here.
God's plan.
Yeah.
Yes, absolutely. Yeah. I believe we get into the story, right, of the term hodling at some point.
Yeah, we do. And the history of that.
Very good, very good. All right, well, before we get into it, just a reminder that if you'd like to get involved with the Academy, check out our Geyser page, geyser.fund/project/infinity, for all the details about how you can join. We have a Telegram group where we discuss all of the episodes, and you can join the live recordings if you like, ask us questions, all this and that. So check out the Geyser page for more information. Otherwise, this chapter is released for free on Nostr, so go over there. The text is freely available. You can read along with us. And anything else to add, Knut, before we dive in?
Not really. Looking forward to discussing the ideas in this chapter with you, Luke.
Very good. Likewise. And with that, let's get into it. Holding on. In the old days, we Scandinavians had to save in order to prepare for the long winter. We chopped wood and salted meat in order to survive. In our current age of consumerism, however, we've forgotten all that, and we pilgrim to the shopping malls as much as everyone else. No one seems to even have a savings account anymore. Interest rates are low, and we're told to borrow and spend as much as we can. We're bombarded with advertising for loans, mortgages, and financial services on a daily basis. Why? Because of our inability to understand the nature of money and its mechanics. Inflation is the underlying force that makes us squander rather than save. Inflation hinders us from reaping the fruits of our labor whenever we see fit, and makes that very fruit rot. Bitcoin reverses the rotting process and provides us with a means of transporting the value of our labor not only through space, but also through time. Knut, what did you mean by this?
This is a paragraph about inflation and how bad inflation is. Moreover, this is sort of in line with the theories and Hans Hermann Hoppe book I really like, called, I believe it's called A Short History of Mankind, or something like that. Maybe I'm mixing it up with another book, like maybe it's Brief History or something. It's The History of Mankind from an Austrian Perspective, anyway, which is a book he got a lot of critique for. And I think he was even kicked out of the university because they thought he was racist. Because he said basically what I'm saying here, that in Scandinavia we had to prepare for the long winter. And he's alluding to that in countries where you don't have to prepare long-term stuff, people have a higher time preference, and therefore their civilizations don't grow as advanced as those on more northerly altitudes or latitudes. The harsher the climate you grow up in, the more long-term low time preference you have, and therefore if your civilization survives that is, you come out the other side a more advanced civilization. I don't know. Do you have any thoughts about that, Luke?
It's a interesting theory, of course, and I mean, I doubt it's true in absolutely every case, but the grain of truth in there is something like, it's not just about the northernness or the winter. I don't think it's about that need to prepare. Like, for example, societies that had to develop agriculture in order to advance. This is something that is the flow of the seasons and needing to stockpile for the future, needing more resources than just what hunting and gathering can provide, and that leads to agriculture, and agriculture requires thinking on annual cycles, this and that. So I think the phenomena stands, but I certainly am partial to the idea that the colder climates forced a certain type of adaptation and making that grow. But I don't think anyone would suggest that the Roman Empire, for example, got that way because it was cold.
No, and I mean, it's a theory, and of course, a lot of factors play into how things evolve and how things progress. But have you heard of the theory that agriculture, that it was the wheat that domesticated us and not the other way around?
Yeah, that's an interesting one. Do you want to explain that?
So that wheat has had more impact on the behavior of humans than the humans have had an impact on the behavior of wheat. So agriculture might not have been as evolutionarily advantageous for us as it was for the wheat, because we would probably be better off eating meat, as every Bitcoiner knows. But wheat prefers being eaten by humans and cultivated, and has spread all over the globe because of their synergy with us. Whether this was, an act of free will or not can also be debated. And we're going to debate all sorts of stuff like that in later chapters.
Very good. Fascinating theory. I wonder if any culture has advanced through the agricultural revolution without some kind of wheat or what do you call it, grain food stuff or whatever it is. But I'm not sure there was ever any kind of a carnivore society that made it to the levels of an agricultural civilization. But it's an interesting theory also.
There's a joke in here about serial killers somewhere, but I can't find it. So let's go to the next paragraph.
Let's do it. The Stanford Marshmallow Experiments was a series of studies on delayed gratification conducted in the late 1960s and early 1970s. In these experiments, children were given a marshmallow or a cookie and were told that they would receive an additional one if they could control their urges and not touch the first one for 15 minutes. Follow-up studies found that the kids who were able to resist the temptation of the first cookie tended to score better on SAT tests, have lower BMIs, and higher incomes than their less disciplined counterparts. Investing in your future self, in other words, resisting present temptation by delaying gratification, is the most effective skill you can cultivate for a brighter future. You reap what you sow. This can be described as having a low time preference. Having a low time preference is a fundamental factor in the economic success of any human endeavor. Not trying to catch fish with your hands for a couple of days in order to construct a rod or net when on a deserted island might make you hungry during those sacrificed days, but it will provide a better chance of catching fish in the future. Likewise, learning new skills now might lead to a higher salary in the future. Unfortunately, our current monetary system distorts our perceptions and incentives and favors those with a higher time preference, those who spend rather than save. We're at a different point in history than the above-mentioned marooned fisherman. Give a man a fish and feed him for a day, teach a man to fish and feed him for a lifetime, the saying goes. The ultimate goal should be to teach mankind to teach itself how to fish. What our current paradigm endorses is give a man enough distractions and he will stop thinking about finding better ways to support his loved ones and will succumb to whatever narrative you fill his head with to make him work for you through taxes and inflation instead of for himself. Yeah, the second form of that phrase is a little less pithy, but makes a lot of sense.
I like the Terry Pratchett version of that, which is give a man a fire and warm him for a day, set a man on fire and warm him for the rest of his life.
Yes, that's a lovely version of that phrase.
Yeah. This is about time preference, and I think right now we can mention what we're doing with this. This is my praxeology book that came out a couple of years ago. It hasn't been available for a while, and there's a reason for that, and that is that we've been reworking this book, or I've been reworking it, and right now Luke and I are doing a deep edit of it, so it's going to be a bit bigger and way more readable and way more accessible. Like, I'm trying to make this the best introduction to Austrian economics that you can, and praxeology that you can find, basically. So we're very proud of it, and we're making it the best we can. So, of course, all the Robinson Crusoe stuff and the low time preference stuff is in this book, even more laid out than here. This is sort of one of those idea embryos that started in one of the earlier books and then got more and more worked through throughout the years. But yeah, low time preference, man. That's how you resist the temptation of becoming a statist cuck.
Yes, well, and I mean, there's a couple of interesting things here. First of all, that this behavior can actually be as early as children. Getting that behavior into kids early is important, I think. Maybe there's something too that the proliferation of screens in kids' lives is making it harder for them to focus and making it hard to just sit quietly and, just sit down and study. And yeah, the whole idea of you reap what you sow, it makes sense in so many cases. I mean, on the individual level, yeah, if you don't invest in yourself and get better at something, whatever it is, you're just going to stay in the same place. But also, like, choices matter. Learning this stuff is important, and it's a part of being a responsible human. There are so many ways that responsibility is just taken away. Like the give a man a fish and feed him for a day thing is sort of, in the current paradigm, the government takes the fish away from the people who have more fish and gives it to the people who don't have any fish. And then those people need the government to give them that fish all the time.
Those who don't wish to fish.
Those who don't wish to fish, yes. Yeah, another point here is also that the political consequences also are a similar thing too. Like, many of the issues that are plaguing Western society really started in post-World War II, basically. Like, you can't see the effects of making bad decisions immediately. Not all of them,
no.
Right? Like the policies that were meant at fixing the world way back after the destruction of World War II has led to dependence on the monetary system, inflationary monetary policy, open borders, the self-immolation on the globalist altar.
I would say it's even World War I. And when the UK goes off to the gold standard, and then every other country follows afterwards, and that's what keeps, I guess, and it, like, printing money to buy tanks. That's how that war was funded, basically. And it's a bit more complex in World War II, but the effects of the money printing are still there. Like, the world went off a gold standard, and we had world wars. That's there's something to be said for that. By the way, the word salary, I learned, is derived from the word sal, which is Latin language for salt. So salt was used as money at the time the word salary came to being. That's a little asterisk here, I guess.
Nice to have a good tidbit. Nothing wrong with that.
Yeah, tidbits are nice. Bitcoin. That should be the name of my shitcoin whenever that's launched.
Yes, we're all looking forward to that, of course. Yeah. Okay, on to the next one. In Bitcoin, people with a low time preference win. If you can resist the urge to sell, you will be rewarded in the future. The Bitcoin community refers to not selling as HODLing, which originated when a BitcoinTalk.org forumer named GameCube misspelled the word holding in a now famous post titled, "I am HODLing." The post became one of the Bitcoin community's most prominent memes and a battle cry to resist the urge to sell during bear markets. Bitcoiners who have decided never to sell most or all of their holdings are referred to as hodlers of last resort. This term is not to be confused with the central banking term lender of last resort. The yearly highs in the price of Bitcoin are arguably less interesting than the yearly lows, which are practically decided by those hodlers of last resort. Considering its limited supply, all that Bitcoin needs to keep rising in price over the medium and long term are these people. Adoption and other metrics of measuring the success of Bitcoin are all dwarfed by the currency's remarkable rise in value since its inception. The price has increased by a factor of 10 approximately every 3 years. The best guarantee we have that it will keep doing so is Bitcoin's limited supply combined with the hodlers of last resort. Yeah, very important topic.
Yeah, absolutely. And HODLing is using, as we know, like this is a medium of exchange over time and space in a way. I would say that the factor of 10 every 3 years has somewhat slowed down. If you look at the price now, it's still about 10 times what it was when this book was written. So maybe those 3 years turned into 6 years instead, but the trajectory is the same. Bitcoin is and will be going up forever as long as it works the way it does right now. So that's something to look forward to for sure. And I get the image of the stairway to heaven metaphor in my head. Like I explained that last time, I think, or wherever that was.
Well, explain it again.
So if you imagine a stairway to heaven that halves every 400 meters up, and it's 50 meters wide in the beginning, and then it's 25 meters wide, and then it's 12.5 meters wide. And you have this is representing the newly issued Bitcoins every 4 years. So it started with 50 and then 25 and then 12 and a half and so on. So imagine a bunch of people trying to get up this stairway. And every now and then you have an outlier that wants to run up the stairs too quickly. And then they get scared of heights. What's that word? Vertigo? When they're up there and they get cold feet and they try to run down again and sell all their Bitcoins. But now when they're trying to get down the stairway, there's already a herd of people trying to get up from these lower steps. So that represents the yearly lows and the hodlers of last resort. And the purpose of the metaphor is that to illustrate how this stairway gets narrower and narrower every 4 years by much more than people like. More than 95% of the Bitcoins are already mined and already in existence. So everyone underestimates the SAT squeeze that is coming in the coming decade. I believe Bitcoin can have a even more parabolic rise in its purchasing power the next 10 years than the first 10 years, or it's more than 10 years now, but anyway. So everyone expects the price curve to smooth out, but I think it can actually be the other way around, that it rockets off again because everyone underestimates how scarce these things really are. There can only ever be 21 million Bitcoin, and most of those are already out there. And Saylor is buying up like he's got 3% of the supply now, or yeah, it's not really his, but some guy at Coinbase owns the supply because not your keys, not your coins. That's another discussion. But still, these institutional adoption stuff, when it really takes off and when it gets competitors and it can only go up. And I think there's a big chance that it will go up faster, not slower than it has.
Yeah, this is an interesting point. This sort of has a little bit to do with that the dollar or the fiat numerator has a higher chance of also hyperinflating into infinity. There's two things going on here, right? Because it's not necessarily that Bitcoin is going to go up forever in the exact sense that the number that you exchange for Bitcoin keeps going up forever. That is true, but the purchasing power increase is going to slow down at some point.
Yeah, but I mean, all the people in the world and all the money in the world can go into Bitcoin before that slowdown starts happening. So like this is much more extreme than people think it is. And even when the slowdown starts, Bitcoin's purchasing power still goes up because in productivity of the free market goes up. Like, so Bitcoin's purchasing power can go up like by like 15% per year, even after everyone, even post hyper Bitcoinization. So it's not that it's ever going to a stable purchasing power or an equilibrium or anything like that, because it's not gold. Like gold has a ever increasing supply. Bitcoin is fixed, so it's like the Mona Lisa. Sooner or later, it can only go up. That's the point. And the only thing it needs to do that is to just keep working the way it works now.
Yes, and well, I think the thing to remember here though is that it's not like Bitcoin has a million X in it because Bitcoin already has a certain percentage of the store of value market, so to say. Even if it does get everything, like just tempering expectations a little, we probably have 3 orders of magnitude in us before things really start to slow down in terms of purchasing power.
What was Jeff Booth's latest calculation? So like he took the entire store of value markets, except for Bitcoin, and he ended up with a Bitcoin price around what was it, $4.5 million per Bitcoin?
Yeah, that sounds right. And I mean, that math makes a lot of sense, right? Like if you go back in the orders of magnitude, 450,000 for like that's 100x, right?
Yeah.
That's not a million X, you know?
No. And a million X, might take a million years, but a million X is there too. Like if you just extrapolate this into the future far enough. And who knows, like it's so hard to imagine what a world on a Bitcoin standard would look like, where you have a totally free market with sound money and it's global. What that means is like the pace in which things get better in such a world, especially when you have like the internet and AI and stuff on top of that, it's just unimaginable for humankind to. It's basically a zero cost everything. It's basically like, well, maybe land costs a bit, but every all the things they're practically free already. Like the production cost of an iPhone is $10. Already, and we pay much more than that, but the production cost to Apple is $10. So everything is like going to zero marginal cost, and already the GPS is free, the flashlight is free, the calculator is free. All of that is already in the phone. So like I think that these things are so hard to think about because of all the, first of all how fast technological progress happens, even in a handicapped free market, and how handicapped the free market is. Like with more than 50% taxes in every country, inflation in every country, like we have no idea how good the world could be, like how awesome everyone's lives could have been hadn't we had all this fucking interventionism everywhere.
You know, I think this is a really interesting idea that maybe the million X is from you get 100X from literally literally Bitcoin taking up the store of value market and
that's the number
that
go up,
but the everything else is the number go down, right? The effects of adopting the Bitcoin system is going to increase the deflationary nature. So it's the Jeff Booth hypothesis.
And even the dollar is deflationary if your denominator for pricing dollars is megabytes. You know what I mean?
Right.
Yeah.
Right.
So, and these are all things that you can take into account. And this is one of the things that just kept on blowing my mind about Bitcoin here in the early books, and still does. Like I can't like imagine. I do think everyone on Earth is underestimating the power of this thing. Like it's so powerful. It's insane.
I love it. I love when we're bullish like this. We often don't talk about these sort of price oriented, whatever the whatever you call it. But
Yeah.
but it's nice when we do that. I have one more point here before we move on, that hodling, or being a hodler of last resort, it's not really possible to be a hodler of last resort to the fullest extent possible, unless you are being more productive than the sats you're spending, basically.
Exactly.
So if you have income that is more than your expenditures, then you can be a hodler of last resort. But if you don't have any income coming from fiat land anymore, like you kind of fully opt out and you go Bitcoin standard, then you really are just, it's not like you're selling Bitcoin, you're purchasing things with Bitcoin after that point.
Yeah, and you realize how much harder it is to be an honest working man, because that's what you are in Bitcoin. And if you have a fiat salary, unfortunately, you're stealing from your children. You're living off of your children's resources because you're using a type of money that funnels wealth from the lower classes and into the hands of the elite, and funnels wealth from the future into the present. And that is not a sustainable thing. So there's so much here. And there's so much to discuss, and we will in all the books.
Very much so. I think just a last point that I think we've touched on here along that vein is that in the far future, I think we've talked about that businesses might exist to have their stacks decrease more slowly, not necessarily to actually accumulate sats.
Yeah, this is an interesting theory. I don't know if this will ever play out that way because it's so bizarre, but your stack can diminish at the same time as your purchasing power goes up. And if you extrapolate into the future far enough, you realize that almost everyone's stack will have to decrease over time, since there's an absolute finite supply of this thing. So, and that just blows my mind. Like, how do you even think about things in a world where prices do that? Like, it's so bizarre. Yeah. But let's not get ahead of ourselves, shall we?
No, but lots of good and interesting points hidden in this paragraph here. So on to the next one. In the Bitcoin space, and even more so in the cryptocurrency space on the whole, there's a lot of talk about usage and adoption. We're shown metrics of trading volumes and merchant acceptance, and we're led to believe that these correlate with the short and long-term value in one way or another. While there may be truth in some of these theories, the most basic function of a deflationary asset is overlooked and rarely mentioned, the elephant in the room, so to speak. The best use for a commodity as scarce as Bitcoin is not to spend it or even to trade it, but to save it and hold it for as long as you can. By doing so, you limit the number of coins in circulation. The more people that do this, the harder it will be to come by and the higher its price will be. Nothing on earth is as scarce as Bitcoin. Nothing is as irreplicable, as immutable, and at the same time as portable as Bitcoin. Its unique history and resistance to change have already proven this over and over. Its absolute scarcity is what gives Bitcoin its value, and ironically enough, this seems to be the hardest thing for people to understand about it. What if everyone in the network became a hodler and decided to never sell? Wouldn't the network just slowly come to a halt? Not at all. Everyone has a price. Few would resist selling some of their Bitcoin if it could buy them a small city. There are price levels for each hodler where reallocating financially may be a wise thing to do. A Bitcoin is also very divisible. The smallest unit, the Satoshi, sometimes referred to as a sat, is 100 millionth of a Bitcoin. Even smaller units are made possible with the introduction of the Lightning Network, albeit not in the actual Bitcoin blockchain. Together, this enables Bitcoin to be highly saleable, even at astronomical price levels. Okay, another interesting one.
Yeah. A couple of things here. Have you seen the movie Dumb Money, Luke?
I haven't.
It's quite a recent movie about the GameStop thing. You remember that when the GameStop stock went up, and there was a culture among day traders online that to not sell, and HODL was a meme in that in the bull run of GameStop a couple of years back. And the movie is basically about how the app they were trading on was called Robinhood, and the GameStop stock just kept going up because everyone refused to sell it. And they were planning to do so indefinitely, but then some hedge fund manager who was losing a lot of money off of this, in the movie played by Seth Rogen, they forced Robinhood basically to stop the trading, and forced people to start selling off. And then, of course, the price tanked. And I watched that movie, and I thought to myself, Bitcoin can do this forever. Like, all of it. You can actually have forever go up by just hodling and refusing to sell. You can do the GameStop thing on Bitcoin in perpetuity. And it's just a matter of time before people realize that is the fact. And then you get hyper Bitcoinization. There's no way out of it. Like, how would that not happen in such a scenario? And that just blows my mind also. And in the movie, there are so many hints at, like, there's so many artifacts of Bitcoin culture, hodling being the biggest one, of course, but other stuff too, like we're never selling, and I think even have fun staying poor is in the movie. So like it, and I recommend the movie. It's sort of like a big short for our day and age. Is maybe not as good as The Big Short, but still it's worth watching, and especially with Bitcoin in the back of your head, like thinking about these things.
Yeah. The GameStop saga is very much a interesting parallel to Bitcoin, and yeah, as you say, sort of a little bit of this. It would have been nice if Bitcoin was the mechanism they were using, but at the same time, I think the GameStop saga was very much a good thing that happened, and the people participating in it were also doing a good thing. There are parts of the monetary system as it currently exists that are enabling extremely shady things, such as these hedge funds that short a certain stock and then they manipulate it through various other means. Robinhood shut down the app, shut down the trading, and yeah, the whole story is just crazy. And well, I certainly hope that a few hedge fund managers lost everything, because they deserve to.
Yeah, and but still, it's unstoppable if it happens on Bitcoin. It truly is. Well, exchanges might shut down and stuff, but you can still buy Bitcoin from other people, like, and you can do this forever.
Yeah, it's funny that whenever there's a big price increase, there's a conspiracy theory or whatever that Coinbase intentionally has problems, because Coinbase tends to always have problems when there's a massive volume spike and price increase, which is just a good argument to use other methods of exchanging your Bitcoin.
Not your keys, not your coins. Get your coins off of the exchanges, and definitely never sell your coins to an exchange. That's even more crucial. Then they end up in these institutional bullshit things. They should be in the hands of the people, these Satoshis. Like, that's their purpose. So don't sell to an exchange. Sell to another person. Buy something for your Bitcoin. Like, use them the proper way. There's another thing about this paragraph, by the way. And it's the difference. This is something I've had many interesting conversations about, most of them with Max Hildebrand. And it's about the difference between saving and hodling. Because as Mises tells us, or teaches us, deliberate inaction is also an action. So saving is a deliberate action. It's purposeful behavior. It's human action. Like, so you decide to save, and the reason you save is you save up for something later. It's delayed gratification. It's not non-gratification. So saving implies that you're planning to sell at some point. So it's just waiting for a certain amount of time. Hodling can be, but doesn't necessarily have to be. Hodling can be forever. There is a purpose to hodling at least some of your stack forever, because by doing so, you actually reduce the total amount of sats in circulation, and you can thereby do your part. I'm doing my part, like to make number go up forever by increasing the scarcity. And this is just so fascinating to me. Also, inanimate objects can hodl. A rock cannot save money, but a rock can hodl Bitcoin. Like you can put the 12 magic words, engrave them in the rock, and now the rock is the thing that is hodling the Bitcoin. So there is so much here, and like this is why I spend my life writing shit about Bitcoin, because I can't stop thinking about these things because they change everything. Like when money is information, the entire everything about humanity changes sooner or later. It's just that most people are just so early to this and haven't woken up to any of it. The 12 magic words are actually magic. Yeah.
I love it. You're in your element. I'll just make a quick
element zero.
Yeah. I'll just make a quick couple of points here. One, I think I liked the metaphor of that someone would sell, someone would spend some of their Bitcoin on a small city. Like that's the right metaphor here, that you can actually spend your Bitcoin when it's increased enough in purchasing power to do good things for your life. There are people who have bought houses with Bitcoin and maybe regret it sometime down the road because they spent all of their Bitcoin on that. And I think the answer is don't spend all of your Bitcoin on the thing. But if you're living in a tiny apartment and you got a family and you're making a lot of sacrifices in your quality of life in order to accumulate more Bitcoin, eventually your Bitcoin is going to go up enough that you can actually take some reward for that and get a nicer house or free up some time, not necessarily work at the fiat mines quite so often. Like these things are good benefits of Bitcoin, and I truly believe it's going to free everyone in the entire world eventually. Go ahead.
Yeah, it's also necessary to keep the network alive that we have some transactions in the mempool, right?
Perfect that you mentioned it. So we had a question in the chat here. Could you talk about the idea of spend and replace? And I'll just quickly touch on that here. So I think spend and replace is totally necessary here. I spend Bitcoin on anything that accepts Bitcoin that I want. I mean, I don't tend to. Maybe something being available for Bitcoin will make me want to buy the thing. But if I'm going to buy something and it's available for Bitcoin, I pay in Bitcoin, and then I go buy some more Bitcoin with fiat. The spend and replace thing, it works.
The spend and replace thing is great because what you're doing is funneling wealth from the legacy system into the Bitcoin system. That's you're making your fiat Bitcoin in a very and you're also helping the ecosystem evolve, because you're actually spending the Bitcoin and not just spending the fiat and refusing to spend the Bitcoin. So I absolutely endorse that. There's also a lot of FUD going around now that Bitcoin needs to be a medium exchange over space in order to function properly. And yes, it does. It also needs to be a medium exchange over time. That's what won the block size wars. There are two sides to this coin. It cannot be one without being the other. However, how much time that passes between the point where you buy the Bitcoin and the point where you spend them, that can be a lot. That can be 4 generations. The important part is that we protect Bitcoin in between, because we the node runners, we the Bitcoiners, we are the ones deciding the fate of the network. And if more than 50% of the purchasing power in Bitcoin is not held on by people who actually verified that what they got into their address was actual Bitcoins by running a node and verifying that they were following the consensus rules. And even worse, if people hold the Bitcoin on exchanges, we could paper Bitcoin is not Bitcoin. That is 100% true. There is a potential problem in more than 50% of the purchasing power being with outside of the actual system. That has how it can go co-opted in the future, and there's the government approved Bitcoin and non-government approved Bitcoin, and there will be a fork. and you will have to choose. And if the majority of the purchasing power is on the government approved Bitcoin, then we're fucked. Like, because most people will go there, and sure, we're not super fucked, but we're fucked in the short term because we'll sort of have to reset the whole thing and start educating people again why they made the wrong choice as we watch one flip the other and stuff. Like, it's not clear where Bitcoin is heading. This is still a work in progress, and it's still a fight to fight. There are still going to be hills to die on here. There's going to be the equivalent of the block size wars in the future, where Bitcoiners will have to make a stand. You could argue that the whole spam debate is that already. There are different ways of looking at that, but the Bitcoin depends on the Bitcoiners, and vice versa. The Bitcoiners depend on Bitcoin just as much as Bitcoin depends on the Bitcoiners. So stay vigilant, run your node, and take your damn coins off exchanges now.
Very good. I think let's continue so we don't get all of the ideas in this one episode.
No, yeah, I'm in rant mode today.
Very good. Always good to see. What not having sound money has done to us is simply unfathomable. Imagine every person on Earth knowing that every transaction they'll ever make will have a real impact on their future prosperity. We're so used to inflationary currencies that most people don't even realize why sound money is important. We're so used to having a large cut of our income silently taken away from us that we don't even realize how much of our day we spend working for someone else. Wars are funded by inflation. Imagine how many man-hours were put in by people who didn't realize they were actually working for a war machine funded by a corrupt currency during World War II. Every time you use a fiat currency, you legitimize counterfeiting. Every time you use Bitcoin, you promote sound money. In fact, every time you don't use your Bitcoin but save it instead, you promote sound money because sound money increases in value when the total number of coins in circulation is limited. It all sounds a bit magic and far-fetched, doesn't it? Increased value over time, no matter what happens? Well, that is why many of us so-called Bitcoin maximalists are so excited that we put our careers at risk for this technology. Once you realize what Bitcoin is and what it will do for the world, there is no way of unrealizing it. It really is mind-blowing. Yeah, I think a little bit of we've already covered many of the ideas here.
Yeah, but this is basically, I get mind blown while thinking about this. Even now that we're just reciting the chapter, it's so mind blowing. So yeah, and it can't be underemphasized how much damage fiat money has done to the world, because basically you have thievery baked into every single transaction between human beings everywhere. And so you have 5,000 or more of years of history that is skewed and false because someone was abusing the system. Like it's so bad. Like all of human history is could be rewritten from this sound money perspective. Like every single thing that ever happened was influenced by this third-party intervention that is inflation. And it's all theft. All of it is insincere. All of it bakes lying and thieving into the very base layer of humans interacting with one another. Now, imagine how good the world could have been without that. Like, that's the promise of Bitcoin.
Yes, I agree. But the counterfactual is always a difficult thing, right? Maybe the world needed to be exactly the way it was to produce Bitcoin.
Yeah, absolutely. We cannot know about the other timelines that could have happened. We only live in the one we actually live in or find ourselves in. So like, there's absolutely something to that. Yeah. Then again, we wouldn't have needed Bitcoin if people could resist the money printing button on the money printer. So there's that.
Yeah, that's an interesting point, because the thing is, the world would be a great place except for the tiny percentage of the people in the world who make it a bad place.
Yeah, if we had, I mean, don't steal. That's the motto to live by. And by the way, I've been thinking how don't steal, if you in the 10 commandments, it's actually counter to many of the other commandments. Like, if the first commandment, you shall have no other gods than me, is actually not compatible with don't steal, because you just stole an option from the guy wishing to choose his god.
Well, there you go. That's a funny one there.
It's a bit far-fetched, but like what I'm trying to say is that don't steal is much harder than you think it is. If you're using fiat, you are stealing. Like someone is stealing you're helping thieves steal stuff from the next generation by just holding or using fiat ever. So don't steal is a very hard motto to live by when you actually dissect what it truly means.
Right. And I mean, I think the other part of the point I was making is that you're never going to completely eliminate people that are willing to take advantage of others, basically. Like the feminist war cry of that there's a femicide going on and that men are killing women all the time, first of all, ignores that the vast majority of murder victims are men, and that those who are perpetrating these things are a tiny, tiny, tiny percentage of the population. And it's the poorly adjusted men. It's the more violent tendencied men. It's the psychopaths. And it's a tiny, tiny, tiny percentage of the world. And that tiny percentage is what's preventing us from basically getting rid of any kind of policing, any kind of security, any kind of this and that. It's what keeps the world, unfortunately, in a constant state of needing to deal with those people, basically.
Yes, and Bitcoin gives us a way to not have to deal with the people directly, but just to disincentivize them from doing crooked shit, right? Because all of a sudden, violence isn't as profitable as it used to be. It isn't profitable to try to cheat the system. It's as simple as that. So Bitcoin does fix psychopathy. Like when they call us psychopaths, that's so ironic because Bitcoin fixes psychopathy.
Gotta love it. It's a great chapter. Let's continue. At the beginning of Time That Actually Is Money, in other words, around 2009, Bitcoin was mostly considered a toy for the cypherpunk movement. As its price started to grow rapidly, a small group of early investors became very wealthy, which in turn spawned a media hype around the phenomenon. Mainstream media remained largely skeptical, portraying Bitcoin as a pyramid scheme, a tulip craze, or a bubble at best. Most journalists simply couldn't understand how an asset seemingly created out of thin air could have any long-term relevance. Some were frustrated because they thought that they'd missed the train. Many still do. In a world where companies like Google, Facebook, and Amazon can rise from zero to world dominance in a decade, people tried to find the next big thing, their next Bitcoin. This attracted charlatans and scammers to the field who launched hundreds of altcoins, claiming to someday be technically superior, faster, or more privacy-focused. What the snake oil salespeople omitted were the crucial facts. Their new coins and tokens were not decentralized, and therefore neither immutable nor censorship-resistant, did not have a fair distribution, and so on. What most people still don't get is that if Bitcoin doesn't work, nothing will. This is humanity's best shot at sound money. It is also, very likely, our only shot at it. So again, the one-shot principle, basically.
Yeah. This is it. Like, if absolute finite supply is ever going to be a thing, we cannot switch that to another absolute finite supply of something else, because that would defeat the entire purpose of it. Like switching a flippening would be detrimental to not only Bitcoin, but the entire cryptocurrency space. Like that because that's the ultimate rug pull. Some other coin flippening Bitcoin, because that means it was all a nothing burger. So this is also a funny, I think, that the Byzantine general's problem, how do you know that you've solved it? Like Bitcoin seems to have solved it, but you can never you can never say for with absolute certainty that Bitcoin will survive forever. Like, so is it solved? Who knows? And it's the same thing with the ossification debate. Like, how would you know that Bitcoin has ossified and will never change again? Like, there is no way, since it's dependent on the people making the decisions and coming to a consensus. But then again, Bitcoin never needed to be perfect. It just needed to be good enough to last forever. And comparing it to all the alternatives that are out there, it's an absolute no-brainer. This is the thing.
And very much, hopefully, it will last forever. Exactly. I think the only thing I'll touch on is that the comparison to tulips gets made disgustingly often. And it's like, why do you keep making a comparison to literally fucking flowers? Like, that's not money. That was a craze. The stupid monkey JPEGs is probably the tulip craze, but it's just so ignorant whenever anyone's like, hey, tulips.
Yeah, and what is the dollar if not a tulip craze? Like, what is it? If someone can just print more of it at no cost, and people crave them all over the world, that is literally the tulip craze. Like, the real pyramid scheme is fiat, not Bitcoin. It's the only thing that isn't a pyramid scheme.
Okay, I mean, I think you may be stretching the metaphor outside of its usefulness, but yeah, like the fiat is still actually serving as money, but like basically those tulips, I think, have a lot to do with actually these NFTs. Like it's the rare ones would get like really, really rare until any really, really expensive, until everyone just realized, hey, wait a second, these are just flowers. Like, what the heck?
Yeah, and the tulip craze metaphor is super good for NFTs, but on the other hand, the pyramid scheme metaphor is very good for fiat.
Yes,
because
very
that's exactly what that is. And so like when you said that it's still being used as money and functioning as money, like I have an urge to say, is it though? It's impoverishing everyone and making like the younger generation, like completely kicking them out of the real estate market. Like, is it really being money? Like, really?
Well, Nick Bhatia would say yes, as you discussed, and the episode isn't released yet, but we've got a nice episode with Nick Bhatia coming up. He would definitely say yes.
Yeah, and yeah, there's something to be. I should tone down both the hopium and the fiat hating here, but I just can't help myself. This is I'm excited.
Very good. Likewise. Let's move on. Many venture capital firms, hedge funds, and retail investors were bamboozled by the buzzword frenzy and invested great sums in these quack tokens. This generated confusion in the market as many altcoins increased dramatically in price at an even higher rate than Bitcoin. Due to human nature and a lack of understanding of basic monetary economics, the bubble grew bigger and bigger until it inevitably popped and wiped out most of the useless alternative cryptocurrencies. Bitcoin experienced ups and downs as well, but they were less volatile. Bitcoin bottomed at levels well above the beginning of the previous bull run, and then resumed rising, just as it had done several times before. The victims of the altcoin craze will take note of this. They will learn the hard way what separates the original from the copycat. They will see the undisputable superiority of sound money. It's just a matter of time. Time, which is money. Knut?
Yeah, not much to add there. I mean, we've touched on all the points with the other paragraphs, haven't we? I think you can just read on here, actually.
Sure. Well, and I mean, I think one thing to point out, perhaps, is that the current Bitcoin dominance is like 60% and is way higher than it's ever been, basically. And honestly, all of these cryptocurrencies just keep going to zero in terms of Bitcoin. It's happening.
Bitcoin dominance index is such a fake metric anyway, because like anyone can pump a shitcoin, and they are all overvalued. So like the dominance matrix, it doesn't even make any sense to me. It's sort of legitimizing the shitcoins and saying that they're actually an alternative. They aren't. It's as simple as that. Like, we had a good conversation about this in the monthly call with the Mithril Adamantium group, and discussed like if there was this one-shot principle and all of that is flawed, and that could absolute scarcity absolutely actually could be replicated. I think the whole, like, if zero knowledge proofs were successful, that was the thesis, then a privacy coin could may be able to coexist with Bitcoin. However, I think that it, at least as the technology functions now, it will have to be sacrificed on the altar of centralization, since the zero knowledge proofs are too big for the nodes in that network to ever have a chance to become decentralized enough, because very soon they will be too expensive to run. Anyway, the most successful altcoin ever is Ethereum, which is, even though it's the most successful altcoin ever, it's an obvious scam. It was from the beginning, with a 70% pre-mine and a rollback of the chain. And it is now absolutely ridiculous in Bitcoin terms. It had its peak in 2017 and never got back to even 50% of that if you're using the right denominator, which is Bitcoin. So it's a long, slow rug pull that had to change their buzzword salad narratives many times over the years. And I think it's an absolute embarrassment. So let's never talk about shitcoins again, shall we?
Well, except the other times you talk about them in your books.
Yeah, of course.
Let's continue. Every time the people of Venezuela, Turkey, Argentina, or Zimbabwe are screwed over by their respective central banking authorities and turn to Bitcoin to preserve their savings or income from rampant inflation, the world becomes more aware of Bitcoin as a store of value. In comparison to the Venezuelan bolivar, there was no crash in Bitcoin at all. There's also a good chance the really big players will accumulate aggressively during the next bull market, given that Bitcoin, for the moment, still represents a very small allocation of institutional and hedge fund investment. Consider what will happen when institutional investors and a growing number of larger nations start to see Bitcoin's potentially limitless upside. At this point, central banks will start to accumulate Bitcoin in an attempt to keep up with reality. This will legitimize the technology even further. It is still unclear when this will all play out. When it does, however, it will be the largest transfer of wealth from one medium to another in human history. Early investors, many of which are technically competent, will become financially independent and, therefore, able to contribute to the ecosystem full-time. More and more people will demand payment in Bitcoin for its ability to store value. Remember that the next block reward halving is just around the corner, and that Bitcoin will have an even greater stock-to-flow ratio than gold in just a few years. After the halving in 2020, Bitcoin will have a supply inflation rate of approximately 1.8%, which is lower than the US Federal Reserve's target 2% price inflation rate. It is important to remember that Bitcoin is still an experiment. Should the experiment work, however, hyper-Bitcoinization is just a matter of time. Yeah, and I mean, this was 2 halvings ago now.
And still true. Even more true. This is before all the lockdown bullshit. This is before, like, in 2021, $21 million were printed per Bitcoin mined. I just think that number is mind-blowing to me. To me, that says that $21 million for one single Bitcoin is probably a low price within our lifetimes. It's like, it's just mind-blowing. they print so much damn fiat. You wouldn't believe it. Like it's yeah. It's also the difference between 1 million and 1 billion are lost on so many people. Like a billion, the difference is about 1 billion, give or take. So, yeah,
great stuff. I think we should just take this one home here. On to the next one. The implications of giving everyone on Earth the ability to rot-proof the fruit of their labor and transport its value through time are hard to overstate. The closest thing we've had to it historically is gold, but gold is not very divisible and not very easy for the general public to get their hands on. More importantly, gold is not absolutely scarce. No one knows how much of it there is left buried in the Earth's crust. Investing in real estate has also been seen as a good store of value throughout the ages, but real estate needs a lot of maintenance and is not cheap to hold on to. Real estate is also relatively easy to confiscate in the event of political collapse. Bitcoin provides us with the potential ability to store any amount in our heads and to pass it down through generations without anyone ever knowing we had it in the first place. It effectively endows each individual with the power possessed by the feudal kings to turn people into knights. Any Bitcoiner can now dub any no-coiner into a fully fledged time-proof Bitcoiner. Yeah, nice whimsical ending.
Is that the end of the chapter?
I believe so. Yeah, it is.
Yeah. It's the revival of feudalism. Except everyone gets to knight everyone else by passing down keys.
Yes, exactly. And just to emphasize here, I think the entire point of this chapter is just to say that Bitcoin is the best store of value that has ever existed. And even if you want to, first of all, you want to have real estate, that's a place to live. Okay, sure. Probably you're going to end up with less Bitcoin if you own a house than if you didn't own a house, probably. But still, you need to live somewhere, and it's nice to be the lord in your own castle, something like that. There's also people who hold gold as well as Bitcoin, and maybe temporarily gold outperforms Bitcoin under some time frame, but those people are also probably losing out on Bitcoin as well. There's an argument to be made that in some cases, when you don't have access to the internet, that you have those precious metals or whatever it is. The Amish use those, for example. But still, ultimately, they are not as good stores of value as Bitcoin. That's, I think, the point of the chapter.
Yeah, and also, like, as I point out in the chapter, Bitcoin is still an experiment. Like this, like if it keeps working the way it does, if the mathematics hold up, then there's no reason that this couldn't be generational wealth for a ton of generations to come, and that this is by far the best investment you can have. Having said all that, like holding Bitcoin or hodling Bitcoin is your responsibility. You are the risk. Like if you knock your head into whatever and lose your memory, then all the Bitcoins are gone. The house you own is not. So like there is a point to diversification from many angles. The big one being that Bitcoin is risky for different reasons than why real estate or stocks or bonds or gold is risky. But Bitcoin also comes with its own risks.
Very good summary. This chapter's been an excellent one, and I think we've delved into plenty of fantastic ideas. The one question from the chat is a little bit of an aside, but how did you know it was time to start focusing on Bitcoin full time? What was your breakthrough moment? And feel free to put any other questions in the chat, by the way.
Yeah, it's a great question. The short answer is I didn't. But what I did, so I was my last fiat job position was as an HR manager for a shipping company, and as you can imagine, that stole like all of my time. So I woke up before the sun went up, came back before the sun had gone down, and I was just working my ass off all the time. And somehow I found the time to write this book in parallel to doing all of that. And when the Bitcoin stuff started to take off for me, more than I had expected, I got invited to conferences and even with speakers' fees and stuff like that. And I started selling more books and got a bit more attention. The everything divided equation had just started taking off, and I thought maybe there's something for me here. Maybe there's a parallel career here. And of course, I had hodled for a while, and I had my stack, and we had a holiday home in Spain that we chose to move down to. So we didn't sell our house in Sweden immediately. Held on to that for a year or two, and had tenants there. Rented it out. But I chose to quit my fiat job and do this full time and just jump off the cliff and see if I could fly. I felt too passionate about it, and that of course, very inspired by Andreas Antonopoulos, who was like the only one doing this back then. Like in 2017, he was traveling the globe and just evangelizing Bitcoin. And I looked at him and I thought, what the hell, I can do that. Why am I not doing that? So, and now I am, so I'm happy. I hope
that's a great story. And I can add that from my perspective, I haven't fully done that. I've basically got 3 full-time jobs at the moment, one in fiat, and a young kid and a family and everything. So yeah, it's a fun time when Bitcoin the idea claims you. It's very hard for me. It's very hard to fully extract myself from the fiat job at the moment, but it's on the roadmap for sure.
Don't undersell yourself here, Luke. You've had a fantastic journey in your Bitcoin career. Like I've seen it, and it's been fantastic. Like and when Luke and I found each other and realized we liked working with one another so much, and our division of labor works very well. We have very compatible brains, even though they're very different in many ways. We think alike about the important things, but we function very differently, and I think that's why this collaboration works so well. And like you said the other day, there's no reason that this couldn't go on forever, as long as we stay friends.
Exactly, enjoying every minute of it. So, yeah.
And good to see some people in here asking questions. We really like that and endorse that for sure. That's this academy. It's going to be a slow burn. It's going to pick up momentum now that the whole conference gauntlet starts, and we bring more people into the groups and stuff. But we love the discussion, and we love doing this, of course. After this particular book is done, it'll be a playlist, and you can share it with others, and we will get into the next book. When is that? We'll start, I think start on Infinity Day, right? With
at the moment, I think that is still the plan. Yeah, we'll have to take a little bit of a pause for the summer, just out of there's so many conferences. I mean, maybe let's hit on that now. We're a little out of order, but
why not?
All the conferences we're going to. First up is Ireland for Knut, and then we're at all of the same ones after that. Prague, BTC Prague, then Calgary for Bitcoin Rodeo, then Riga, then BTC Hell. After that gauntlet of conferences, we'll start this one up again. And of course, come to BTC Hell if you possibly can. That's our conference. In fact, at the day of this release, as in 2 days from now, we're opening the official BTC Hell pop-up shop and having a launch party for that. Plus, we are officially republishing all 3 of Knut's first books, including this one in Finnish. I don't have a copy of it on me right now to show on the screen or anything, but we do have Matemaattisesti turvattu itsemääräämisoikeus, which is the Finnish translation of sovereignty through mathematics, plus Independence Reimagined and Everything Divided by 21 Million coming out. So
So on a scale from 1 to 21, Luke, how retarded would you say the Finnish language is?
The Finnish language is a much. I enjoy it much better than I enjoy English. Let's just put it that way. So to answer your question, it probably is 21. because I'm a bit of an interesting guy.
Yeah. No, we're doing all that. So and also we should mention our sponsors here, right?
Of course.
Yeah. So Plan B Network, there's a lot of stuff happening there. I've seen Mira and Giacomo have been in Japan, and they're now in Taiwan doing stuff. So the Plan B Network is expanding. It's great to see. The BIS school is underway for this this season. I will be giving a lecture in Lugano in the middle of June, and a bunch of other people will too. The course from last year is available for free online. There's a lot of material there. planb.network is the website, right? Yeah. planb.forum is the website for the conference, which we're going to in October. I believe.
Yes, absolutely. And of course, our other sponsor is Bitbox. They're our favorite hardware wallet manufacturer, and they've been a great sponsor of us for a great supporter of us for a while now, of the main show and of this program. So yeah, check out bitbox.swiss/infinity if you're in need of a hardware wallet. And it's easy to use, doesn't compromise on security, and you get 5% off with code Infinity. So check that out. And thanks again to Bitbox and to Plan B Network and to all of you for joining us and getting involved with the Academy. If you're listening to this and you'd like to get more involved, if you'd like to join the live chat, go to geyser.fund/project/infinity, our Geyser Fund page, and you'll get all of the details about the Bitcoin Infinity Academy.
Yes, and don't forget to brush your teeth, and don't forget to spread the word about this thing and talk to other people about it, because we like quality listeners over quantity, but we like quantity too. So like if you can bring some more good people in here, we'll appreciate that a lot. And looking forward to seeing you all at some of the conferences. And if you're in the Mithril Adamantium group, we'll make sure that you get the special treatment in Helsinki and wherever as well.
Perfect. With that, I think this has been a absolutely roaringly fun episode. And so thank you for listening. And this has been the Bitcoin Infinity Academy.
Goodbye.